FMCG index overall has outperformed Nifty over the last 1 year. But talk about the March quarter earnings, they've been a mixed bag of sorts, right? Nestle India revenue, there was a 10-year high. Tata Consumer Products reported splendid beat across the segments. But today the stock in focus is HUL. Well, the company hasn't really delivered really encouraging set of numbers, rather a bit lower than what the streets was working with in terms of both the top line performance, the bottom line performance, and also the volume profile of the company. Just in terms of what the top line has been for the company, basic numbers first for you. Revenue, net profitability, the profitability first, 2,552 odd crore as compared to an estimate of a number of around 2,580 odd crore. Revenues have come in at 14,893 odd crore as compared to the poll estimates of around 15,250 odd crore. If you talk about the EBITDA profile of the company, the operational performance stood at 3,470 odd crore and the expectation was to a number of around 3,470 odd crore. Beg your pardon, 3,650 odd crore. So we are seeing that some amount of miss coming in on the operational performance of the company. The margins, however, have been more or less in terms of what the street was working with, or CNBC TV18 poll was. The margin stood at around 23.3% as compared to a poll of around 24%. Talk about the absolute growth that the company has witnessed year-on-year basis. Net profitability first, we're looking at a 10% increase out there year-on-year basis as compared to the expectation of a number of around 14% growth. Revenue was up by 10.6% in this quarter year-on-year basis. EBITDA up by 7% and margin stood at 23.3% as compared to 24.1% in the corresponding quarter of the previous year. In terms of the volume growth, that's where a margin amount of disappointment is crept in, right? Domestic volume growth stood at around 4% versus CNBC TV18 poll of around 5 to 6 odd percent growth out there. The home care revenue growth was at 18.7% versus the poll of 18 to 20 odd percent, and the beauty and the personal care revenue growth too stood at around 10.1%. So net, we are looking at the numbers which are a tad shade lower than what the expectations are. But to decode the numbers further, we're being joined by Mayuresh Joshi, who's the head of Equity Research India, William O'Neill Company, and Sanjay Maniyal, the AVP Equity Research Analyst at ICICI Securities, who covers the speeds quite closely. I'm going to come to Sanjay first as to what does he make out of this entire number right now. HUL hasn't typically delivered a beat as compared to what we've seen from the other two companies from the FMCG basket. But what stood out for you?
No, so yeah, the numbers are a bit lower than what we were estimating. We were estimating 6% kind of a volume growth on an overall basis, whereas they have delivered only 4% kind of a volume growth. Similarly, those sequential margins have improved by approximately 150 basis points, but still year-on-year gross margins are down. Even on an EBITDA level, EBITDA margins are down by 90 basis points. I think they have taken price cuts specifically in the BPC category in the October, November, and probably that price cuts have kicked in on a full quarter basis in Q4. Similarly, they have taken price cuts in detergents and bits and pieces, but larger. I think the price cut has come in only in April, which probably will be reflected in the next quarter. Considering the fact that detergent has seen a very strong growth on a full year basis, on a full year basis, they have seen a 9% kind of a volume growth. The other two segments, BPC and the foods, have delivered a softer number on a full year basis as well. So yeah, it's a bit below what we were estimating. I think volumes, though, have recovered for all the other FMCG companies, those who have posted results till now. But I think still it is below what the street was estimating. Volume have not been recovering at a very faster pace. It's a steady recovery in volumes as prices have also been taken. Price cuts have been taken very steadily only. I think there's one more risk, as Reliance has been entering into the FMCG segments. Most of the companies will be pretty aggressive on the pricing. So the kind of margin expansion we have seen in last decade in FMCG companies, we may not see that kind of expansion in future. So yeah, on an overall basis, we can see that FMCG as a sector has been waiting for multiple challenges as of now.
Sure, Sanjay. I'm going to go to, I'm going to come back to you in a bit, but I wanted to ask Mayuresh as to all the segments that have been given. How is he looking at the number, and where is the disappointment really creeping in from? Because the food segment that we were just talking, you saw Tata Consumer Products doing fairly well, Nestle also for that matter on that level. But how is this division stacking up for HUL, and what's your assessment on the overall segmental breakup for this company?
Afternoon, Nickey. No, so as Sanjay rightfully mentioned, I think volumes are a tad below what the markets were expecting. And clearly, if you look at the segmental reporting that HUL has done, obviously home care, with which detergents becomes a huge part, has done exceedingly.
All right, so looks like a little bit of disturbance from Mayuresh, and at this point of time, we're going to quickly touch base to him in a bit. But at this point of time, it remains to be seen how does the food segment overall stack up. Just to see and touch base with Mayuresh back. Mayuresh, are you there?
Yeah, so sorry for that. I think there was
no worries. Please go ahead.
Yeah, so I think the personal care segment and the foods segment for HUL have seen a low single-digit volume growth. Obviously, I think the culprits have been the inflationary pressures that most FMCG companies have probably faced as headwinds. But to a certain extent, the reported numbers from Tata Consumer and Nestle, they've probably navigated that well. Now, they've got an entire slide, Nickey, in terms of the representation on how the inflation cost is expected to soften out. We've seen crude prices soften, soda ash, caustic soda, crude oil prices, crude palm prices soften out, but milk prices, both powder and skim milk, still remain elevated. To a certain extent, inflationary pressures are expected to come off. So to that bit, I think the kind of margin hits that the company is used to take might start tapering off. But I think the commentary related to the second half recovery and volume growth with price cuts that it is expected to take, I think that will hold the key for HUL and FMCG companies.
All right, Mayuresh, we're going to cut into the press conference for HUL just to see how the commentary has been stacking up for you.
Significant commodity inflation. Surf Excel became the first home and personal care brand in India to cross $1 billion turnover mark. Through our relentless focus on market development, we have scaled home care liquids portfolio to over rupees 3,000 crore in this fiscal. Our beauty and personal care division grew competitively at 12%. More importantly, we grew volumes despite a mid-single digit decline in market volumes. Growth was led by our premium portfolio. Despite our brands, Lux and Pond's crossed 2,000 crore turnover each, taking the tally to 5 BPC brands in this club. We have also made good progress in transforming our portfolio towards high growth demand spaces. During the year, we launched 3 new premium beauty brands and also forayed into health and well-being category. Moving to FNR, our revenues grew 5%, led by strong performance in ice cream, coffee, and foods. With our focused market development actions, HFD continued to gain penetration and market shares handsomely. Tea widened its market leadership versus our nearest competition. Ice cream delivered strong performance on the back of impactful innovation and activations. During the year, we divested our salt and atta business in line with our strategic portfolio choices. We are a powerhouse of big brands that traverse the minds and hearts of our consumers. We have total 19 brands, each clocking over 1,000 crore turnover, which contribute to more than 80% of our turnover. Doing well by doing good is fully ingrained in our business. We have reduced CO2 emissions by 97% versus 2008 baseline. We collected and safely disposed over 1 lakh ton plastic waste during the year. Through Hindustan Unilever Foundation and its partners, we have delivered a cumulative and collective water potential of over 2.6 trillion liters across thousands of villages, which is more than the drinking water needs of India's entire population for 2 years. We are committed to sustainable sourcing of our agri raw materials. In this fiscal, 95% of our paper and board packaging, 82% of our tomatoes, and 69% of tea came from sustainable sources. Our community development initiative Prabhat has reached over 9 million people. Project Shakti, which was piloted in early 2000s, now empowers around 1.9 lakh women entrepreneurs across thousands of villages. To summarize the full year results, we delivered yet another year of strong all-round performance. Growing at 16% was significantly ahead of the market, and we added about 8,000 crore to our top line. Our bottom line performance was very healthy with 13% EPS growth. We were the best ESG rated Indian FMCG company by leading rating agencies. Considering our strong performance, the board of directors have proposed a final dividend of rupees 22 per share, subject to approval of shareholders at the AGM. Together with the interim dividend of rupees 17 per share, the total dividend for the year amounts to rupees 39 per share, a 15% year-on-year increase. Let me now shift focus on March quarter performance, and I will start with operating environment. Inflation moderated sequentially, although commodities remain elevated versus long-term averages. FMCG market growth showed gradual improvement with rural slowdown bottoming out. Total FMCG market volumes, which were declining earlier, have now become flat. While rural volumes continue to decline, the extent of decline further reduced in this quarter. In this context, HUL delivered another quarter of competitive growth. Our turnover grew 11% with underlying volume growth of 4%. EBITDA margin at 23.7% remained healthy. Net profit grew 10%. Our gross margin improved sequentially by 120 BPS. We continue to invest competitively behind our brands and stepped up A&P investments by 80 BPS versus December quarter 22. Talking about segment performance, Home Care delivered another strong performance with 19% revenue growth. BPC grew 10% with broad-based performance across categories. FNR grew 3%, led by foods, coffee, and health food drinks. We strengthened our market leadership in tea. However, we had a marginal sales decline as category witnessed consumers downgrading due to higher inflation in premium teas vis-a-vis loose tea. Margins for all three segments remain healthy. Talking about some of our innovations, Novology, our new skincare brand in Mastige beauty segment, was launched during the quarter. Lux Bath range, Millet Horlicks, Lakme Mousse, exciting flavors in ice cream, and a new hair care range in Tresemme and Dove were launched during the quarter. Now moving on to the outlook. Looking forward, the near-term operating environment is likely to remain volatile with weather-related uncertainties and risk of global market slowdown. Price growth will tail off further due to lapping of high base and sequential reduction in prices. We expect volumes to recover gradually due to high levels of cumulative inflation and the fact that consumer and consumption habits take typically some time to recover with a lag. In these circumstances, we will continue to manage our business with agility to grow our consumer franchise whilst maintaining margin in a healthy range. Our focus is on ensuring right price-value equation for competitive volume growth, building back gross margin, and stepping up A&P investments. From mid to long-term perspective, Indian FMCG sector continues to be very attractive. Favorable macros, coupled with low FMCG per capita consumption, continue to provide huge runway for growth. Our focus remains on delivering 4G growth that is competitive, consistent, profitable, and responsible. With this, I complete my prepared remarks, and now we'll take questions.
Hi, gentlemen. Firstly, Mr. Mehta, lovely to be here, and congratulations on such a great stint so far. We'll really miss you going forward. But I did first ask you about the demand outlook. Now, the past, we saw Tata Consumer and Nestle delivering strong growth, but here a slight miss on our estimates in terms of volume and revenues also that we saw. Just wanted to understand the demand outlook. Is that continuing to remain challenging? Are you seeing any uptick? And give us a sense of both rural and urban as well. Rural, is there still a challenge, and what's the outlook, especially given the heat wave, unseasonal rains? There are concerns of El Nino as well. So what's the outlook there?
Yeah, thank you for that question, and it's been a pleasure interacting with all of you now for the last 10 years, and this is my 39th and last quarter at the helm of HUL. You know, first let me explain the annual numbers and then I'll come to the quarterly numbers. if we take a look at the market, the headline growth has been about 8% and the volume growth has been minus 4%. So remember this, 8 and minus 4. The difference between the two is the derived price growth, which is about 12%. Now 12% has been unprecedented. We have not seen that kind of price growth. In this context, HUL has delivered 16% top line as against the market growth of 8% and a volume growth, underlying volume growth of 5% against the market being negative minus 4. So you can very clearly see that we have outpaced the market as far as the year is concerned. Yeah. Then when you look at this from an urban and rural lens, the urban market has grown at about 11% top line. Rural has grown at 4%. I'm still on an annual basis. And the volumes on an urban basis has been about minus 1, whereas rural has been minus 7.
Right.
So you can see there is more stress in rural, yeah, but on an overall basis, it's been absolutely a brilliant performance by HUL. Then let's go to the quarter. Now this is a heartening thing. Against an 8% growth, what the Nielsen read says, all our categories put together, the last quarter the growth has moved to 11%. And the volume, which used to be minus 4, has become flat. And both urban and rural have improved by about 300-400 bips, with a consequent reduction in the negative volume growth. Yeah? So that's the story. Now in this context, remember the total volumes are flat, we have delivered a 4% volume growth,
Right.
again outpacing the market. And then we come to our top line growth, which is 11%. Now here I want you all to understand a bit more nuanced number. Our 11% is the headline growth and the volume growth is 4%, so our price growth is 7%. Whereas you look at the market, it is 11% top line and nearly flat volume growth. That means 11% price growth. Ours is 7% price growth. Now let me explain what is the probable cause. Why is my price growth lower than the market? In the previous quarters, our price growth were more or less similar to the market growth. Yeah? Now, he has explained that the commodity prices have started moderating. That means we have stopped taking more price increase at an aggregate level. There are some commodities where the price increase is still there, but in many we have taken a price reduction. Yeah? So our growth, price growth has come down. So what happens when you stop taking a price growth, then after a year, the price growth disappears. Yeah? Now, when we sell, our accounting is based on what we sell to our distributors. The market captures based on what the trade sells out. Right? So there will always be a lag. So even the market growth going forward will come down. The price growth will come down. And when you would recall that 2 years back, when this hyperinflation came in and also we were still in the midst of COVID, we had set for ourselves twin objectives. One was we will increase our consumer franchise, and second is we will protect our business model. Now we have seen outpacing the market and unprecedented share gain. Yeah? The second important bit is if you look at EBITDA, which was at a pre-COVID level at about 25%, is still at a very decent level of 23.4%. Yeah, and in the last few quarters, sequentially, our EBITDA, our gross margins have improved. We are investing more behind the market, and our EBITDA also sequentially is improving. So we can look back and say that in this very turbulent environment, we have met our twin objectives.
Right. And what about the outlook on rural also, given
The rural again, it used to be minus 7% volume growth for the full year. For the quarter under reference, it has become minus 3.
Right.
So it is progressing. It is still negative volume.
Yeah.
And if we have a good monsoon, I think the government has done a phenomenal job in terms of capex spending. Yeah. And if we start getting a multiplier effect of that with a good monsoon, and if our GDP growth rate, which on all account, all estimates today, it would be anywhere between 6 and 6.5%, I think we should start seeing first the negative volume growth plateauing, and then hopefully starting to go up.
Okay.
If you would recall, in the previous years, we used to monitor that a rural growth has to be higher than urban growth.
Open, yeah.
Yeah, we are still far away from that, and it is understandable because the rural incomes are much lower on an average basis. The commodity prices have been very high, but if things stabilize and the prices go down, we will pass on the benefits to the consumers, and we should start seeing the volume improving.
Okay.
But by when do we expect these volumes? Any time period? Because you did mention gradual recovery in your speech.
That's right, because it is very difficult to predict the commodity prices, right?
Because of the
Right?
commodities,
Exactly.
we will be figuring
Exactly.
out
If, say, there was if, for instance, if Russia-Ukraine war were to settle down, yeah, peace were to happen, I would believe there would be a clearly softening of commodity prices. And we are very clear, we believe in price-value equation. If commodity prices come down sharply, we'll pass the benefit to consumers.
Right.
And then we'll start seeing the volumes go up.
Right. Actually, that was what I wanted to follow up on. Some price reductions we saw in the skin cleansing, but I think the laundry segment still saw some inflation. So I just wanted to understand, while I understand that it's still volatile, do you think that price hikes are sort of behind us because it's relatively...
Yeah, because you see the price at an aggregate level,
Okay.
price hikes seem to be behind us unless there is another spurt in commodity price.
Okay.
Yeah, because if you would recall, in the previous quarters, we've seen a price hike as much as 12%, whereas now it has come down to 7%, and it will progressively go down if the commodity prices, they don't spike up again.
Do you have an estimate when we can return to seeing volume-led growth?
First is, our volumes are growing.
No, but I mean, right now it's still price-led on an overall basis.
Yes, but you see the equation changing?
Yeah?
It used to be somewhere in the vicinity of 11-12%.
Right.
Our volumes
Right.
were 4-5%. Now it is coming down. But I said that for meaningfully to volumes to go up, we should start seeing commodity prices not just moderating, coming down, so that companies like ours can pass the benefit to the consumers. That's when the volumes will move up.
I want to know something on the HFD and the tea segment. That was a bit subdued in terms of growth in the last couple of quarters as well. On ground, are you seeing something in terms of a sign coming in from that we could see stronger growth going forward from here? Could we expect better revenues coming in there?
That's a good question. Yeah, we have diverse categories, and different categories have different raw material base. Tea was one of the first categories way back in 2020, when the commodity prices shot up significantly, right? Now, if you look at today, we don't have a price growth at all in the tea category. Yeah, so it is a very different cycle that it is going for. But the nuanced view is that there is a difference in price between the premium teas and the teas which are loose teas. Yeah, so there is a down trading happening from a premium tea to the loose tea. Hopefully with the new tea picking season, this will get adjusted, and then an equilibrium will happen.
And also any concerns, because of the milk inflation, for the
That's
HFD
right.
segment, that is still higher on the higher end as well. So could that be anywhere seeing an impact as well?
That's again a wonderful question. You have deep insights into the category. Yeah, we have seen a mid-single digit growth in HFD. And we would still want volumes to come back strongly. Yeah, and when you look at milk prices being very high, it's a reality that not all the consumers who are hitherto been using HFD keep continuing it with the same frequency.
So then, you're saying volume growth is what you'll be focusing on HFD, then does that mean no pricing growth here? We could not expect a price hike, or could you take a price hike?
We would want a volume-led profitable growth.
But then would you take a price hike?
It depends on the commodity price, right? Because we have to protect the business model as well. But again, like I said, you must understand that during the last 2 years, our net material inflation went up by 30% cumulatively. And during this period, our price increase was only 60% of NMI, in the vicinity of 18% cumulatively. So we take price increase significantly lower than the net material inflation.
In overall inflation, also consumer CPI numbers also saw a little bit of an improvement. Are you seeing, as a result of that, what are the trends that you're seeing in the discretionary categories and the out-of-home categories? Was there a significant slowdown? Is there a pickup? And also, if you can post that, also comment on how ice cream is also doing with summer. We saw an early summer setting in. How did that category?
You want to take this?
Yeah. So let me pick up ice cream first. Month of March, all of us know we had unseasonal rains.
Yeah.
And hence sales for that month of March were impacted. We have a full-on innovation portfolio now, which we're launching and hoping for a good summer. And then we'll see as to how the entire sales equation play out in June quarter. That's a big quarter for us to sell ice cream sales.
Okay.
Then what was the second question?
The discretionary and out-of-home categories in general, are you seeing a pickup now that there seems to be some easing on inflation also?
Yeah. So the 3 or 4 categories which have had very large amount of inflation impact. Laundry we spoke about, skin cleansing, which is soap we spoke about, tea, which is again moderated we spoke about, and overall inflation of milk, which has impacted HFD category, Vinny, the point that you were making. We have seen it in certain discretionary categories like HFD, there has been, or mass skin that we were speaking earlier, there is indeed a correlation of consumer spends, disposable money that they have, vis-a-vis the amount of inflation which happens in those related categories. Now the good news is with commodities getting moderated, bulk of the impact on skin cleansing, on laundry, on hair, that is getting now much better compared to previous quarters that we had. Key conversation, I think, if there's only one place where we do see inflation this point in time significant is HFD category, both from a milk perspective and from cereals and barley perspective. Bulk of other part of the portfolio does not have sequential challenge on commodity inflation. So that is one part of the portfolio, I would say, the equation of price, commodity and volume, the way we're seeing getting played out across the portfolio, that's getting played out in that space. Tea is the second element in commodity. We will know when the new season, new crop comes. To Sanjeev's point earlier, there's a pretty big difference between premium tea's inflation and loose tea inflation, which is called, that's what we call explainers. Now, as a new crop comes out, we got to see as to how does that crop comes out between premium tea and loose tea, and we'll know as to what are the puts and takes on volume and growth basis of that.
Let me embellish a bit of the question that you had raised. We had a fabulous full year on ice cream.
Right.
Yeah, we grew over 30%. Brilliant year. Yeah, when you talk about retail price inflation or consumer price inflation, we must remember it includes both commodities as well as services. If you have to look just commodities, look more at a wholesale price inflation. Yeah, that's a fine nuance we must always remember. And these numbers are averages. Yeah, whereas different commodities, different categories have different commodities which are going through a different commodity cycle. But on an average, yes, our price increase is moderating. Our gross margins, which had come down, have started seeing an improvement sequentially. That's the trend we are seeing.
So in margins, I just wanted to know, would we say, is it safe to say that margin, the worst is behind for us and now we could only see an improvement? Sequentially, you mentioned that we are seeing an improvement. This quarter slight bit just below the 24-25% mark.
Yeah.
But worst is behind?
Yeah. Let me again give you a perspective here. If you were to talk about gross margin, I would believe that yes, the worst perhaps is behind us, unless, like I said, there is another spike in commodity. Otherwise, the worst is behind. We are seeing a sequential improvement. Yeah. Now, the entire gross margin will not necessarily flow down to EBITDA. We are absolutely clear. Again, the twin objective, we have to improve our consumer franchise and we have to protect our business model. We look at competitive intensity of spends. We don't want to lose market shares. Yeah, if the competitive intensity goes up, we'll spend more money. So the improvement in gross margin which is happening, we are first improving, putting money back behind our brands
A&P spends.
in A&P spends.
So run us through a little through what is the trajectory on the A&P spend?
So if you see last 2 quarters you saw, in the previous quarter we sequentially dialed up 80 BPS of A&P expenditure.
Yeah.
In this quarter we further dialed up 80 BPS more of A&P expenditure. The objective, as Sanjay mentioned earlier, is always to have share of market ahead of share of voice, on a total portfolio basis, also on category basis. So that's our A&P strategy. And we will do that as required to drive market development, to drive innovation. We keep investing on A&P. From a margin perspective, as I mentioned earlier, there are 3 clear jobs to be done for us. A, price versus cost and price value equation to consumers. With changing platform of prices, we have to ensure that we have completely competitive on price value equation. And then to Sanjay's point, focus is to drive gross margin and invest behind A&P competitively. That's our margin management model. Price value equation, driving, ensuring that we drive gross margin and maintain competitive A&P spends. That's how we'll drive our margin portfolio going forward.
Yeah, just again to embellish, September quarter was the toughest for us when it came to margins. Yeah, and our gross margins since then have gone up by over 250 pips. And September quarter was also the quarter when our A&P spends were the lowest. And if we look against September quarter and March quarter 23, is our A&P spends have gone up by nearly 170 bips. So for us, that's very critical, protecting our market shares and growing the business.
We have time for one final question.
I have a question.
Yeah, Nupur, please go ahead, Nupur.
As you said कि market share protect करना है आपको and price cut you have started taking. जब भी price hike होता है तो एक quantum होता है कि 10% से price बढ़ा है, 12% से price बढ़ा है. लेकिन जब price cut होता है सर तो एक quantum पता नहीं चलता कि कितना price cut हुआ आने वाले quarters में कितना price cut होगा. क्योंकि अगर price cut ज़्यादा होता है तो demand recovery faster हो जाएगी rural में. So can you tell us कि कितने percentage point में price cut हुआ है और होने वाला है?
Yeah. So देखिए कितना होने वाला, it's very difficult to predict. Yeah, because that depends on commodity price का क्या हुआ है. लेकिन जो आपने principles जो elucidate किए हैं वो सही हैं कि जब, और उसमें और एक मैं आपको बताना चाहूँगा कि जब हम price लेते हैं तब हम price increase छोटे steps में लेते हैं. Yeah? लेकिन अगर हमारे पास क्लियर विजिबिलिटी हो कि कमोडिटी प्राइस घट रहा है तो हम बड़े स्टेप्स में प्राइस घटाते हैं. क्योंकि ये भी आपको समझना चाहिए कि मार्केट में अगर ज्यादा प्राइस के स्टॉक्स हों तो कंज्यूमर जो है वो कंफ्यूज हो जाएगा. राइट? तो हम चाहते हैं कि क्विक स्टेप्स में हम प्राइस घटाएं. बट इसके लिए वी हैव टू बी वेरी क्लियर व्हाट इज गोइंग टू हैपन टू द कमोडिटी प्राइस. इफ दे ऑसिलेट, अगर जैसे अभी आप ऑयल प्राइस भी देखें, ऐसे नहीं है कि इट्स अ लीनियर ट्रेंड. कभी नीचे जाता है, कभी ऊपर आता है. बट द ब्रॉड ट्रेंड इज दैट फ्रॉम द पीक इन्फ्लेशन दे सीम टू बी मॉडरेटिंग ऑन एन एवरेज, नॉट फॉर एवरी कमोडिटी. Anything else you would want to add, Ritesh?
One last question. Just in terms of the premium skincare, how much is that contributing? And also in terms of D2C brands, there are a lot of D2C brands in the skincare and that segment as well, like Wow, Mamaearth. Any impact in terms of that for the D2C side?
If I can just add on to the D2C bit because that's where my question was also. Two acquisitions we saw most recently. I just wanted to understand what's the progress on that bit and more acquisitions. Do you continue to eye more D2C brands and what new categories do you see promising? I know you won't tell me what categories you're looking at, but after healthy snacks and all of that you forayed in, any other sectors that you think look promising for you?
Yeah. See, coming to D2C, which is by and large in mass stage skincare category space, we have launched, as you know, 5 brands in that space over the last few years' time. And this is where we also then made our own premium beauty business unit, a separate business model to drive demand and consumption in that space of the market. In this quarter, we also launched a new brand called Novology with a fabulous amount of proposition to consumers that further gets added again in the same premium mass stage skincare range. Overall, skincare to start with is a low penetrated, low consumption category, all of us know. Within that, we've seen excitement coming in that space. So we have fully leaned in with a very robust portfolio. Spaces like hydration, spaces like acne and glow, all of the spaces we are very well captured in terms of the demand spaces within skincare. In terms of D2C websites, we have 13 D2C websites now through which we're able to engage directly with the consumers, apart from, of course, other means in the reaching to consumer. So it's an exciting space. We do have seen over in the market, number of brands which were getting launched have come down compared to what we saw, I would say, a year or so ago. And but our business is doing pretty good. The business that we launched, the point that you asked, Shilpa, earlier about health and well-being, we acquired we invested in 2 brands in health and well-being space. In the quarter, we had a plan, we delivered to the plan. What we're doing now is integration of Oziva and then supporting with distribution and integrating the distribution systems of Hindustan Unilever with what we can sell as Oziva brand. That's a priority for us. So it's been just a few months since we acquired the brand. Integration is what we're focusing on with Oziva at this point in time. It's a very exciting space, the way we had articulated earlier when we acquired the business. The headroom for growth, given what India is demanding, given what consumers are demanding, is pretty high in that space. So we are very encouraged in that space getting entered into health and well-being category with those strategic investments.
What is the contribution figure coming in as of now?
Yeah. See, overall for FMCG industry per se, it's a small. Remember, we have spoken earlier, it's a very small portion of the market. And of course, these are new brands that we have launched within the total scale. This year, we've added, the financial year which finished, we added 8,000 crore approximately turnover to our total business. That's the scale at which HUL operates. These are small demand spaces, of course, new brands we launched. They are growing very well. But of course, the cumulative impact on total Hindustan Unilever, we will see when the segment grows disproportionately compared to what it is today.
But you are looking at more acquisitions. Is that something that's continuing out?
You know, we always scan the horizon for acquisitions, but we have certain principles. We don't go in for acquisition because it is fashionable. We look at it whether there is a strategic fit. We look at it, what is the brand positioning? Is it complementary to a portfolio? Is it a niche that we want to enter into? We look at the capabilities that we may be able to acquire, and we also compare make versus buy. Can we create that position ourselves, or will it be better to buy a brand? And then, of course, it has to be at the right price. Yeah. Thank you so much.
Thank you very much. Thank
It's
you.
been a pleasure.
Thank you.
Thank you.
And interacting with us.
No, it's been fabulous interacting with all of you all. God bless you all.
Listen, can we get a picture with
Of
you?
course.